What's going on, guys? My name is Richard Moglen and welcome to another video. So today I want to highlight Docusign or DOCU because really it's been one of the best performing stocks out there. It's still holding above those 30 and 50-day moving averages, which are key for me. And it has the fundamentals to back it up in terms of earnings growth and sales growth. And if I move my head right now, you can actually see the last couple quarters and going back all the way to April of 2018, all the way through January of this year, you can see some insane growth in earnings and sales. And this is exactly what you want to see from a recent IPO. It IPO'd in April 27th of 2018, and it's clearly in its growth phase, which is exactly when you want to be trading these type of stocks. And before we go any further, this video is sponsored by IBD and MarketSmith. I think this is the best software to quickly find stocks just like Docusign and Dexcom last week that have excellent fundamentals backing up their excellent performance. So if you haven't tried MarketSmith yet, there'll be a link in the description where you can try 3 weeks for $20. And if you've never tried it before, I highly suggest you check that out. But anyway, in MarketSmith, you can quickly see a rundown, an overview of the stock by looking at their proprietary rating. So the EPS rating's an 84, which is honestly very good for an IPO. The group RS is a 94. That's exactly what you want to be looking for in times like this during a correction. You want to be looking for overall groups that are doing really well, and then individual stocks within that group that are outperforming the market. The SMR ratings is a C, which isn't fantastic, but the accumulation distribution rating is an A-, which in this market is very impressive, and that overall composite rating is a 99. So very good ratings from IBD. And you can also see that the return on equity is 10%, which isn't quite what I like to see. I like to see at least 13 to 17%. But given that it is a recent IPO and it's got that excellent growth here, I'm sure as the company matures, this return on equity will go up. And overall, as I said, it's in a great group. If you just look at the stocks in the group that IBD highlights, these are all great picks at the moment. You've got a recent IPO as well, Cloudflare, RingCentral, Zoom, Everbridge, FIVN. These are excellent stocks, and you want to be picking the best stocks in the best groups. And another reason that Docusign really caught my eye, and really MarketSmith is fantastic for this, is you can see if you click over here, the number of funds that are investing in the company. And it's had incredible growth in this area, going from 2 funds in March of 2018 all the way to 753 in December 2019. And that's going to really prop up the stock's price and really dry up that supply, meaning that when there's a lot of demand coming in, the price is really going to skyrocket. So that's what I'm looking for. And this trend is exactly what I like to see. So that's very cool that MarketSmith allows you to quickly check out the funds. And overall, that's pretty much it on the weekly page. And now let's check out the daily chart because you can see from the pattern recognition that MarketSmith actually draws in some key potential buy points. So the prior high was 92.55, and this is really the key area that I'm watching. You can see here that Docusign actually tried to break out, but really you shouldn't be buying breakouts during a correction. They're not really going to work that well, but it's consolidating nicely right below that, and again above those 30 and 50-day moving averages. So this is one really at the top of my radar, and it's got that nice RS rating of 98, and that RS line is right near all-time highs. You can also see right here the annual estimates. So for 2021, it's supposed to be up 65%, and the revisions are upwards. And for 2022, the estimates are up 63%, although they did revise downwards recently. So there's the expectation that there's going to be some very good growth in terms of annual EPS for Docusign. And this is, again, one of the reasons why I'm really keyed in on this stock. And you can see right here, a little summary. It provides e-signature solutions, which is very important in this time when people are collaborating online and you can't really meet in person to sign contracts. And we all know all that red tape that goes into running businesses and governments. So this could be another company that really benefits from the situation that we're in, but it was acting extremely well even before this crisis happened. And it actually had a green line breakout going from 59.62 and breaking out right here. And since then, it's been doing extremely well. And right now it's at 87.94. And it's right near all-time highs, right in that sweet spot where I like to look to buy stocks. So now taking a look at Docusign's website, you can see that they advertise right there that they are an e-signature company. And really, along with Adobe, they seem to be one of the prime competitors in this space. I haven't really heard of many companies that are in this area. And taking a look at the products, their big one is that e-signature market, but they also offer some contract lifecycle management, some document generation, it looks like. And also, if you go over here, you can see that they're also expanded a little bit into the payment space. So that could be an interesting area where they could bring in more revenue in the future. But right now, I think their main focus is on this e-signature market. And their benefits, it's easy to use, it seems. More than 82% of agreements are completed in less than a day, 49% in less than 15 minutes. So it seems like the product is easy to use. And if you go back to the main page, they've got over 500,000 customers and have used e-signature hundreds of millions of times. So seems like a great product. If you go down here, you can see a little bit more about their products. As I mentioned, the contract lifecycle management. It seems like you can follow along with everything that's going on, all the parties involved with the signature, and you've got also different features down here. Fast professional agreements. You can actually create the products with the Docusign software. And finally, they've got an analytics division to this as well, which is so important for really any company these days. And really, it seems like they're kind of a pioneer in the cloud space, especially in this e-signature business. And based on their chart, they really seem to be primed to really break out once this correction is over. So now let's check out the chart in TC2000 and take a look at the technicals, support, resistance, and I'll talk about the setups that I want to see happen in Docusign. So going over to, actually, let's take a look at the weekly chart. So overall, this is exactly the pattern I like to see in IPOs. It formed its first kind of tradable base here. Looks like a little bit of a cup, but then that broke through, and really it didn't form another promising setup until a green line that started from the peak right here that was broken in, looks like, around November of 2019. So another potential entry, another kind of shorter term trend line break was right here, this downward trend line. If you drew it in, let's see, from this high going on here, you can see it broke through this on really large weekly volume, very significant volume right here. This is probably the area that a lot of those institutions that we saw were acquiring shares. And you can see a green dot on the weekly as well, which shows a good momentum shift on the weekly price data. And from that point on, it's been doing very, very well. And now let's head over to the daily chart and take a look at how it's handling this correction. So overall, it did dip down with the overall market, but let's see this RS line, and let's make it a little bit bigger. You can see it's been outperforming the market really since the 27th of January, which is a strong indication that it could be a true market leader. And during these big pushes right here, it's really been taking off in comparison to other stocks and the S&P 500. And we saw in MarketSmith this attempted breakout here. Let's go ahead and switch back over to here. So on the 31st of March, it tried to break out, was knocked back down, wasn't able to break through this pivot. And right now it's still hanging in there above this green dotted line and red line here, which is the 50 and 30-day moving averages. And it seems like it's consolidating nicely. It's right near all-time highs and could potentially break out any day. So right now, I'm not going to be looking at buy breakouts because we are still in a correction. We are still in a blue, white, red pattern on the Qs. So until this pattern really emerges to red, white, blue, I won't be looking to buy breakouts. But if this pulls back and bounces off the 50-day moving average, I might try to buy on either bounce off the 10-week line or the 50-day moving average, or on a pocket pivot of some sort. So this is very high on my radar because of those fundamentals and based on its price action. So the key resistance for me is this 92.55 level that was highlighted automatically in MarketSmith, and some support. Intermediate support is this kind of 78, 79 level here. I wouldn't like to see it break through this kind of recent low. And if it does, I really don't want to see it break below the 200-day moving average, or especially not below this low. But if we get another wave down, I think that could be a possibility. And that would just give this stock a little bit more time to set up a nice long-term base, maybe a double bottom of sorts. And then potentially from that, when the overall market turns around, really take off. But once again, this is high up on my list. And it had that nice green line breakout right here, maybe after a nice VCP pattern right here. And based on the volume pattern, this is still under accumulation. I think the up down volume, let's see, I think it was 1.3. It's 1.2. So anything over 1 here basically means that on up days, there's more volume than on down days, which identifies that institutions or just a lot of investors are buying this stock, and more basically buyers than sellers. So that's a positive for this stock. And I think, once again, this is one of the strongest out there. It gapped up a little bit today, but then got knocked down with the overall market. And it is being quite volatile. You can see that on the 2nd, it was down almost 9%. And then on the 6th, this Monday, it was up 14%. So this is still a very volatile environment. It's risky to buy stocks at this time. I'm being very selective, and I'm going to wait for a clear setup, a bounce off that 50-day moving average, or a green or blue dot before I try my hand at this stock, even though I think it is one of the best stocks out there. But that's pretty much it for the video. Thanks so much for watching. If you have any questions or comments about how I would trade Docusign, just let me know in the comment section below. And if you haven't yet left a like on this video, please go ahead and do that. I would really appreciate it. But other than that, thanks so much for watching, and I'll see you guys in future videos.